Good morning, good afternoon, good evening for everyone joining today's webinar. Thank you very much for your time and for your attendance today. We've looked at the attendance list, and it's great to have you all from all different regions, from the Americas, from EMEA, from APAC. So it's great to have you here today. Today, we're going to talk about everything related to the GRESB Real Estate Lender Assessment that we recently launched. And I'm here together with my beloved colleague, Dan Winters. Dan, how are you doing today?
Doing great. Really excited to be here. We've got a lot to share for sure. I took a look at the list of folks that have signed up for this webinar. Super impressive. We've got a number of GRESB APs. There's, I think, over 700 now globally to go with a whole bunch of new folks that are really interested in the lender assessment. So let's go.
Awesome. Great. Let's go through the agenda because as Dan mentioned, we have a lot to discuss today. So initially, we're going to start talking about GRESB, everything related to GRESB and the GRESB Real Estate Lender Assessment, what it is, why we did it, who can participate. We'll then going to deep dive a little bit into the development process. So how did we actually get to the point that we have this assessment? We engaged with the industry and we talked to a lot of you, and we worked with a lot of industry folks on the participant side, on the investor side, on the partner side. So we got the whole industry together, and we are really eager to tell you more about that. We're then going to talk about the content. How does the assessment actually look like, and how is it tailored specifically for real estate lenders? And then we're going to talk about the output, the benchmark report as we have it, and all the additional elements that you get as a real estate lender, as well as on the investor side, the outcome that you will receive. Lastly, we'll talk about the timeline. How does that look like for 2026? And then we'll go through a couple of questions. We received some questions from you, so thank you very much for submitting some of these questions. We had a couple of additional questions that we received over the last year. And also, we have a live chat. So if you do have any questions that you want to ask, please put them in the live chat. We will try to answer it today, my colleagues, and otherwise we'll get back to you soon. So with that in mind, let's talk about GRESB and the real estate lender assessment.
So just a little background here on where GRESB came from. So we've been around since 2009, and it was prompted by a number of institutional investors that got together and said, we'd like to understand greater contours, the sustainability attributes and aspects of our private credit and our private equity portfolios on the real estate side. So that was 2009. Brilliant idea. And the key with GRESB is industry engagement. So a number of LPs got together and came up with criteria that matter to them when putting money out the door to a fund manager. And more LPs joined and more GPs got on board and moved this industry forward. That's the whole idea behind our membership base. We've got over 90% of the fund managers in the IREI top 150 fund manager list. Same thing on infrastructure. The majority of the REITs participate and are members of the benchmark. So our vision collectively is simple, right? We want the financial industry to drive the world forward. And we can do this together. And that's how we do this with Mindshare. The mission is simple, right? To empower the financial markets with actionable insights on structured, non-financial data that go to inform how the financials came about. And we are doing a great job collectively together, and we're excited to have you be part of it.
Awesome. And yeah, as you mentioned, we've been doing that for quite some years, since 2009. We've done that on the real estate side, specifically, mainly on the equity side. We've done that for infrastructure since 2016, on the fund side, as well as on the asset side, and recently on the development asset side. And now, since 2025, with this year to expand the real estate lender side. So really going on the lender perspective as well.
One little thing to bring up here, it's not like Motassem and I got together and said, hey, let's come up with the lender assessment. We received tremendous feedback from our longstanding members that said, hey, the real estate assessment is great, but it's not really appropriate or tailored well enough for lenders. And that was the spark.
Exactly. And that is exactly why we started doing this. So the reason why we started, and a little bit of background about the real estate lender assessment, is that The idea is that we assess, and it's a validated assessment on how sustainability is embedded in real estate lending practices. And we'll get into that in a bit, and how that is different than on the equity side. But the focus is simple. It's on material topics for lenders. What is really something that you can control as a lender? So that's what we are focusing on the real estate lender side. And that's the feedback that we received continuously as well. Real estate lending is different than on the equity side. So focus on the elements that a lender can specifically influence, which is different than on the equity side. The idea is that it helps investors as well as lenders, as well as the industry, to try to understand and manage their sustainability risks, impacts, as well as opportunities. So it's not only for the real estate lenders, it's also for the investors and any other stakeholder that is interested in how sustainability is incorporated in the lending practices of the lender. With that in mind, a lender in general has, and we're going to generalize here, less influence over the assets than a real estate equity investor. And with that in mind, the participation or the assessment in itself focuses on other elements, I will have to say, where the focus of the real estate equity assessment, I will call it for now, is a lot on the performance side. This is a bit more difficult on the lender side. And that's why the assessment at this moment is focused mainly on the management component and mainly on the management elements, basically the elements that you can touch and you can control, influence as a real estate lender. That brings us to the burden. It's a low burden from that perspective because it's a concise assessment. It focuses on the elements that you can control as a lender. We do try to keep it structured in the same way as we have for the other assessments. So it's an annual assessment that starts on April 1st. It ends or it closes on August 1st. So we give a little bit of extra time for the participants in 2026 and the years coming. And the whole participation is through the GRESB portal. So everyone that is already doing an assessment on the equity side or on the infrastructure side, or you're a partner that is helping your participants, it follows the same structure and it follows the same procedure. So you'll have an assessment that you can go on the GRESB portal and you can actually submit it in the same way as you do for the other assessments. And last point, Dan already mentioned it, and we're going to touch upon that today a lot more. This was not developed by Dan and myself, and this was not developed by GRESB internally and say like, okay, these are the questions that you should be asking and this is how it should be scored. No, we collaborated with the industry. It's a for industry, by industry initiative, similar to how the other assessments have been developed. So there is a whole lot of engagement that has happened, and that is continuously happening. We have one-on-one sessions with real estate lenders, with investors, with partners, to try to understand, okay, what is happening in the industry and how collectively we can drive this forward.
Risk management, good, better, best, loan, portfolio management. That's really the key elements here. Let's keep going.
This brings us to why we are doing the GRESB real estate lender assessment. There is an equity assessment. And in the past, people have done the real estate equity assessment as a lender, but continuously we received feedback on this is not really tailored to me, whether it's from a content perspective or whether it's from a scoring perspective. So that's how we started with this whole initiative. And we're like, okay, what are we going to do? I touched upon three elements here. So we have the perspective of an investor, perspective on the lender, and then the industry as a whole. From an investor perspective, since 2009, we've been providing transparency to investors. And through the engagement between the participant and the investor and the benchmark report, the investor actually understands the sustainability practices on the equity side. And we've heard this more and more happening also on the debt side. Like, okay, do you have something on the debt side? If you're an investor, you want to know how sustainability is implemented, not only on your equity funds, but also on your debt funds. And this has been growing over the years. And then you've received a lot of feedback from LPs, also from GPs on this front. So this is from an investor perspective, really what we're trying to do. We're trying to have this transparency and make this engagement process as easier also on the debt side.
And to be clear, what we're talking about with investors are the sources of capital, the major pension funds, sovereign wealth funds, and the places that the general partners from the big private equity and private credit firms go to source their capital from. What do these folks need is they want consistent metrics. They'd like to do things like carbon footprints. They want to understand the risk profiles of their investments, and they're looking for partners in progress. The ability to do that all devolves to structured non-financial data that's coming in a similar fashion through the myriad of investments, the myriad of investments that an institutional investor can have. Private credit needs to elevate the same metrics as on the real estate side in order for there to be apples to apples comparisons.
Exactly. And you need to be able to be compared on the elements that are tailored to you as a lender. So that brings us to the lenders and the fact that this assessment is different than the real estate equity assessment because it's tailored to lenders. So this came throughout the whole engagement process. As a lender, you generally have a limited access to asset level information. And by default, if you do not have as much information, you'll get a much lower score if you actually do the real estate equity assessment, because the real estate assessment is 70% scored on the performance component. And if you don't have that information, it's very difficult to obtain this information because you are a lender instead of an owner that actually owns the asset, often is a landlord and owns the data or is closer to the data, so to say. It becomes difficult to obtain a high score. So with that in mind, yes, Dan.
Well, Mo, that's a super important point, right? So the idea is, right, lenders with their span of control have a limited access to energy, water, waste consumption data once the loan is put out in the marketplace. We're working to change that. There's some behavioral changes, some structural, legal things that happen on the leasing side that cause some barriers. But there are ways to tease and get at this. So we're working with the industry to advance the industry. And that's a whole nother, side element of the lender assessment that's happening.
Exactly. And that brings us to the third point, not only for investors and lenders, it's just for the industry in general. What we're trying to do as GRESB is we try to drive the industry forward. And we do that collectively with everyone that is here today during the webinar and with the industry in general, whether you're a participant, whether you're an investor, whether you're a partner. We try to drive the industry forward. And that is not only on the equity side, that is also looking forward to the debt side and trying to drive that forward as well.
Okay, yeah, there you go. Oh, so the areas of focus. Sorry, I moved ahead even ahead of that one. Okay, so 3 things. Know your customer, KYC. Understanding their sustainability track record, whether or not they're engaged with building certifications, energy efficiency improvements. That's really a key element of underwriting. So know your customer is great, and that's really about their track record, the borrower's track record. And then I kind of blended it with know your collateral. Know what's happening at the asset. Opportunities to improve that asset over the duration of the loan should be something that bubbles to the top when underwriting the deal. And so, putting marginal capital to work in better outcomes that drive operational efficiency is really the underpinning of sustainability. It's a financial driver, and that's what we're all trying to get after here. And then the loan portfolio management. Once that deal is done, there continue, if it's in your book for 3 years, 5 years, 10 years, whatever that is, the world continues to move and change. So understanding the either risks or opportunities that are happening with the existing loan book is so critical. And we've learned that from our roundtable members at the GRESB Lender Roundtable, that there's a number of groups that are doing great things when it comes to loan portfolio management. And there's others that are just getting started, but all of a sudden the aha moment says, oh, right, we're subject to energy efficiency laws that are happening at the municipal level or various things, state, federal, countrywide, and that affects portfolios over time. Keeping your eye on that ball is key.
Awesome. I don't have anything to add. I'm going to continue to the next one and specifically talk about who this is for. So we already talked about the investor side being able to consume this information, be able to engage with their fund managers. But there's more. Who can actually participate is, very simply said, everyone that does lending on the real estate side. So we have the private credit funds, the mortgage REITs, basically the folks that we had on the equity side as well, the private equity funds, the REITs on that front. But of course, we have traditional lenders as well. In some jurisdictions, a lot more prominent than others. We know that in Americas, the traditional lending is still there, at least from a banking perspective, but there are quite some private credit funds. In the EMEA region, a little bit less so, even though that it's coming up. And in the APAC region, traditional lending through banking is still heavily dominated. And this assessment is relevant to everyone. So it's relevant if you're a bank and you want to be benchmarked on your real estate lending practices, this is relevant to you as well. Insurance company, if you're doing lending as well, direct lending as an insurance company, it's relevant to you as well. And we have a couple of insurance companies that have joined us as well already. If you're a pension fund that does direct lending, if you're any other type of fund that does direct lending in as well, this is relevant to you as well. So in a nutshell, everyone that does lending and has a real estate loan book or is developing a real estate loan book, this assessment is for you. So you know where you stand and you can drive decisions forward. Yeah, Dan, go for it.
Oh, I'm sorry. Anchor on this slide for sure, because when we get to the FAQs, there's a question about how does benchmarking happen, right? So when we're determining peer groups, this is the first cut, right? You private credit, or you a bank, or you insurance company, right? And then we try to go from there to geography, property types, things like that. But this is the first, way to go. And, it depends on who's in the benchmark. Right now, it's one big lumpy thing, but we realize that the conditions on the ground are slightly different for each of these four groups. So the goal over time is to be able to segment them and benchmark them via these peer groups.
Exactly. And that makes sense, because if you're a big bank, you have a different regulatory regime or a different regime. You want to be compared to another bank. If you're a private credit fund, you generally want to be compared to your peers. So that makes sense. And that's also the feedback actually that we received, because we asked everyone through the engagement process, how do you want to be benchmarked? And one of the key ones was, what type of lender am I? The second one was the geographical location, because if you're based in a certain country, you want to be compared to peers in that specific country or that specific region. Ticket size, loan sizes, the size of a fund or the size of the company is relevant as well. All of these elements we received through the engagement process, and all these elements will feed eventually into how we benchmark. Just one note on that. At this moment, it's focused on geographical location, because we lumped it together at this moment. We are expanding the benchmark, and we do need to have sufficient participants within a peer group, so to say, in order to have, how do I say that, relevant peer groups.
Mo, I think we just fed the audience the next slide. Let's see it.
Exactly. Well, there you go. The 3-year engagement process.
Yeah. Well, I'll take this one, right? So, we had a lender assessment. We're going to talk about that in a second, right? And we set it aside back in 2018, and the groundswell kept coming. Hey, let's bring this back. Can we bring it back? And this was coming from our members. So in 2024, we put together a roundtable of many of our engaged members that have private credit funds. And that was the engagement process. So we took this previous assessment from 2018, threw it in the middle of the table and said, what do you think? Let's make it up to 2020. Let's bring it up to 2025 standards. And so in 2024, we did the engagement. In 2025, we then established the benchmark. Everybody took the test, and we continue to improve it. This is the year that we now expand the benchmark by opening it up to other GRES members, as well as the broader investment industry establishment across the globe. And we will continue to expand this by bringing in more, to be able to have robust benchmarks and move the industry forward.
Great. And the reason why we're telling you this is just to explain the fact that there is a whole initiative. It's a 3-year roadmap plus that actually the lender assessment, again, doesn't come from us. It's through this engagement process. It's to ensure that this assessment is relevant to the real estate lender industry, both from a participant, from a lender perspective, as well as from any other type of stakeholders.
Let's advance to the next slide, because I think there's some logo in this one. There you go. Right. So these are the groups that made up the Lender Roundtable in 2024 and 2025 and have submitted their ideas as well as their portfolios to establish the benchmark for all of us to then build upon in 2026 forward.
Exactly. And for everyone that is watching this today and want to be part of this real estate lender roundtable, whether you want to join some of the sessions that we have to participate as well and to grow the benchmark in 2026, we have contact details later on, but please join us. This is really the year where we're expanding this. So if you're interested in this, let us know, because this is the year that we're growing the initiative together with you and advancing the industry.
There's some super smart people at these firms. And part of what really brings people together is the opportunity to dialogue with each other. And that's what the Lender Roundtable brings, is so the folks at TD Management can talk about how they, since 2020, have been asking their borrowers for consumption data, and they've been receiving it. They're way ahead when it comes to being able to carbon footprint their portfolio compared to others that are just kind of starting out. So that became very interesting to a number of the other firms that made up the roundtable, and they started asking questions. Well, how'd you do it? What'd you do? What was the first step? And how did it, how are you able to implement this going forward? And it brings this robustness. And I'm just picking on one particular issue, but there's many that we've been talking about as roundtable members. We throw something in the middle of the table, and then everybody on a quarterly meeting will chime in, and some best practices bubble up to the top. That's
Exactly.
the secret.
And I've had many conversations over the last couple of months where that was something that really everyone is looking for, is that basically learning from each other, learning from peers. What are you doing? Whether it's on the other side of the ocean, whether it's a competitor, so to say, we're all in this together. So everyone wants to say, okay, where should I be focusing on as a lender? And what is actually really something that I should be doing, or something that I necessarily don't have to do? And we do these sessions on a quarterly basis where we try to take a topic and then basically let people talk, learn from each other. And we're sitting there, of course, and trying to understand this as well and take this upon on the assessment too.
Not only are these people smart, they're vocal. So let's go to the next slide.
Yeah.
2000, a lot of data points came in, a lot of thought, right? And nuanced issues. Construction lending is different from, mezz debt, which is different from straight up, primary loans.
Exactly. And this is what we've done since 2024. So we actually received more than 2,000 feedback points in 2024 on the assessment. And we continue doing this in 2025. So even within the assessment, there is a feedback section, or like, okay, what went well, what didn't go well, what are the things that we should add, what are the things that we should remove, what is the perspective from a participant, what is the perspective from an investor. This is just one way of how we ask for feedback. That's through the actual assessment. We also have one-on-one sessions. So at the end of the assessment, we had one-on-one sessions with everyone to try to understand how was this, how relevant was this, how was the outcome used, how did you engage with any of your stakeholders, for us to try to understand what is happening in the market and how can we make this assessment better for 2026.
I think the key thing that emerged with those conversations was this is a tool, this is an engagement tool for the ESG folks, if you will, and for the portfolio managers. For it's internal engagement, right? What are we doing with our book of business and our processes and procedures in order to advance the ball? Are we implementing global best practices, right? So there's this whole internal engagement process that's really valuable to the person who's the ESG professional within the investment management firm. Then there's the whole external side, right? For it's capital raising, working with the borrowers, communicating with your capital sources, those structured non-financial metrics that drive impact and that matter, right? That's the two key elements that came out of this whole engagement process: the ability to elevate those metrics and do it consistently, and the ability to drive engagement internally to drive change.
Exactly. And I just want to mention that the feedback that we received and we keep receiving is amazing. It's high level. So we ask about the structure. We ask about how relevant is this for you. whether it's either for internal purposes, external engagement purposes, but we also go very detailed, like on the indicator level, which checkbox is relevant, which element is not relevant. And we receive feedback from everyone. So from the participating side that actually took this assessment, but also from the investor side that were part of this roundtable and have a different view on how they want to see this progress, as well as from all the different partners. So it was great to also get a lot of feedback from there, and because they see a lot from their perspective as well. So it was amazing to see how that feedback was given to us. And we're taking all that feedback into account, and we're providing the feedback back to them through these working group sessions that we have, as well as through the assessment, of course. So keep on going with the feedback that we receive.
I think the biggest aha moment from folks is that they thought it was daunting, and then they realized that it was relatively straightforward and that they're not alone, and that they face a lot of similar issues in their firm as their peers that are part of the roundtable. And that's assuring, and it's also motivating, right? It gets people, to really give them a shot in the arm to keep moving forward and driving progress within their firms.
Exactly. And even this week, I had a session with a member of ours, and the conversation also started with like, I don't have a lot of asset level information, and it's difficult to collect this information. And I was just listening. I was like, you are not the only one. And we have some solutions that we're actually working on together with our industry partners internally as well. We're gonna get to that later on, but it's really a lot of people think they're alone in it, and then you just hear from your peers, and you're like, okay, I'm not alone. As long as you drive the if you drive the industry forward as we try to do together, we'll get there at a certain point.
Let's talk about the guidance document. I think those are the rules of the road.
Yeah, I actually want to talk first about.
Oh, wait. Yes, you're right. I'm sorry. I'm skipping ahead.
Before we go into the guidance, etc. You want to discuss a little bit about the debt assessment then?
I do, yeah. So I brought this up. I seeded this idea about 5 or 7 minutes ago, the debt assessment. So back in 2016, we created the GRESB debt assessment. This is when GRESB was a single, it was the same time that we were launching the infrastructure assessment. So we called this GRESB debt. It was for real estate. And it's basically gets at know your customer, know your collateral, know your book. And what are those best practices when underwriting and doing, but it was done in 2016. So we had a good group of 30, a good solid benchmark moving forward, but GRESB was small. We were resource challenged, and the industry, it just wasn't, the timing wasn't ripe. So we set it aside. And as the guy who was involved in that, it was, I really wanted to keep pushing it forward. And the good news is that the industry stepped forward. A number of folks from MetLife and PGIM and others kept, sending me emails over time. And in 2022, Motassem and I said, all right, let's put some folks together and bring this back. So that was the starting point. That we were already like in the red zone, if you're an American football person, or in the strike zone to score the goal. And so we had the debt assessment there for people to then bring forward their ideas. What's missing? Climate wasn't really part of the conversation as robustly as it is now in 2025, back in 2018. So now there's a number of climate issues in here. Carbon accounting, another issue that's bubbled to the top. Health and well-being. These are the issues that have been advancing in the industry. And that's GRESB's objective, is to advance the industry. So these issues have now been brought into the lender assessment from the input from the LPs and the GPs to push us out to the 2025 assessment, which, now we've established the benchmark, and here we are in 2026, ready to move it forward.
Exactly. And what we're doing in the meantime as well is, next to all the feedback that we receive, we also look at the real estate side. We have Real Estate Standards Committee, we have the whole foundation, and we have expert resource groups that are really thinking about the most important topics in real estate in general. So we're not doing this in a vacuum. We're also looking at what's happening on the real estate side, what is happening on the real estate assessment, and we're taking the elements that are most relevant to the lender as well, because there are elements also on the real estate assessment side there are definitely relevant to a real estate lender as well. So approximately 30 to 40% of the real estate lender assessment is similar to what we have on the real estate side. So every year, what we do in general is we look at the feedback that we receive from the roundtable, and then we also look at what are the changes on the real estate side and how can we incorporate these, keeping in mind that the lender is different, is at a different point in time than a real estate participant that actually owns the asset. So that's an additional element that we add to it. I think with this in mind.
Keep going. Yeah, there you go. Sorry. Now you've caught up to me.
Yeah, so what we do is this follows a similar structure as what we have on the other assessments, whether it's on the real estate side, whether it's on the infrastructure side. We provide as much guidance as we can for everyone that participates, or on the engagement on the investor side or on the partner side, to be able to submit an assessment and to actually understand what is the intent of the questions that we're asking. What is it that is really relevant for you as a lender? So we have a guidance, a reference guide, follows exactly the same structure. The 2025 reference guide is available online at this moment. The 2026 will be available mid to end of Q1 before the assessment opens. And this basically contains all the relevant information that you need to know of how the assessment looks like. We also have the scoring document, similar to the other assessments. It contains the scoring on a very detailed level. And one thing that I do want to add here is that one thing that we don't have, and I'm going to talk about it in a bit even further, is asset level information at this moment is not mandatory. And because asset level information is currently not mandatory, we're not scoring this at this moment. And that means that the assessment in general, the scoring of that is pretty absolute. Like if you look at the indicators, you know whether you're getting 1 point, you know whether you're getting 2 points, you know whether you're getting 3 points. So with that in mind, you know, just by doing the assessment, looking at the reference guide, looking at the scoring document, you'll know what your score is, because there's no benchmarking element within the assessment itself. The benchmarking only happens from a rating perspective. So only when you get your benchmark report and only when you get your scorecard. So the assessment in itself is an absolute benchmark, an absolute assessment, I have to say. Yeah, these guidance documents will be available to you. The 2025 ones are out there already. The 2026 will be out soon. Also, a quick sneak peek into that. The 2026 indicators won't change much. We received some feedback, but there is not a lot of changes when it comes to the 2025 assessment. So have a look at the 2025 one for everyone that is attending today, and we'll update you with the 2026 one as well. And if you do have any feedback along the way while you're going through this reference guide, let us know as well, because we're happy to receive any feedback from all of you.
Yeah, thanks for bringing up the feedback. The feedback is, we have the lender roundtable, and that's been great, but we're open for everybody's thoughts. The idea is to move the industry forward, and it comes from all different places. When people consume this document, they're going to see this. Let's go to the next slide. They're going to see the standard, the setup,
Yeah,
the way that GRESB is always formulated with our components, aspects, and indicators. So component management performance aspects are thematic issues within the portfolio, and then an indicator are the specific questions, right? Good, better, best is the whole idea behind this. So you can dig in here and you can see how these are germane and relevant to lenders, right? Risk management, key, number one. What kind of leadership activities is the firm engaged with, right? Loan portfolio management, I talked about that earlier. Once that loan is done, it's not over, right? We need to continue to see what's it's exposed to, if there's opportunities for improvement with when the loan comes due for the next loan. All sorts of things can be really honed in on if you go through the assessment.
Exactly. And just to give a bit of a comparison to the real estate assessment, the loan portfolio management and the questions or the indicators within those are very specific to the lenders. And that's where we received a lot of feedback. So questions are about your loan portfolio strategy. What are you doing from a strategic perspective when it comes to your real estate loan book? Or property borrower due diligence, property and borrower review, basically your due diligence. What are you doing there? Because that's the financial moment of truth. And that's where as a lender, you can really influence things. As well as Dan mentions, the loan monitoring. What are you doing after the loan closed over the years? Those are questions are new, so to say, and are not ones that you will be able to see in the real estate assessment. So that's really specifically catered to the real estate lenders. And a lot of these questions actually come up from the old debt assessment that we had in 2018. So that's from a content perspective, really on the management side, what we changed. On the performance side, we asked for feedback, like, okay, how relevant are all the asset level information indicators? The focus there was let's just dig into energy and GHG. So we didn't implement water and waste here because it's already difficult to just get energy and GHG. So on the asset level, we did ask for energy, GHG, and building certification, and we added questions or indicators regarding to construction lending. I just mentioned asset level data is not mandatory. And the reason for that is that from a scoring perspective, we also changed. So I just wanted to show everyone here that from a content perspective, we changed things. We added loan portfolio management, and there's a whole subset of questions there. We removed the water and waste because that was, at this moment, specifically at this moment, I have to say, less relevant to the group that participated. And then from a scoring perspective, and I'll have to go to the next slide. If you look at, I'm just going to focus right now on just on the performance component. We're not scoring energy, GHG, building certifications, and construction lending for 2026. So asset level data is not mandatory. You can submit that data. We're going to do running a pilot, and I'll talk to you in a bit about that. But from an assessment perspective, it's not mandatory. And that means the assessment is concise at this moment. And that also means that it's a management component heavy assessment at this moment. And Dan already mentioned it. Loan portfolio management is a very important one. So that's heavily scored. And we have 3 sub aspects in there. And risk management is a very important one as well. And that's what we're really focusing on hammering on.
If I may, one of the big lessons that I've observed on the equity side over GRESB 17 years, and I've been around for a dozen of them, is it takes multiple years in order to move a portfolio or actually move a program, an ESG program, sustainability program, whatever we would like to call it, to move that forward within a firm. So year one, part of the benchmarking process is to just learn what you don't know, understand the language and what's happening out there in the industry. And it's, if you watch scores, and that's your proxy, it's usually around year 3 or year 4 that firms on the equity side start to hit their stride. I'm expecting, this is my personal commentary here, I'm expecting to see the same thing on the lender side. First year, right? Well, we don't have any data, right? You're not expected to. If you get to year 4 and you still don't have any data, I think you're going to find that your peers are starting to sprint ahead. And that's the whole idea about benchmarking. It's do it, put some programs and processes and procedures in place, check again the next year, check again the year after that, make continual, measured progress over time, and do it in lockstep with your peers. If you can do it faster, go tell your LPs about it.
Exactly. And what I just want to add here is that this is a 2026 lens. So the scoring on the asset level is not there at this moment. We are working together with the roundtable, with the working group, with the industry, to see how quickly we can implement this. Because everyone that we talked to did agree that somewhere in the future, looking at performance of your loan book is very important from a sustainability perspective. So we do expect at a certain point, we will have scoring on the performance side. The question, and that's the main question at this moment, is how quickly can we do that? So, and in that, from that perspective, we're going to engage with the industry from a participant perspective, from an investor perspective, the whole industry basically, to see how quickly we can progress that and we can drive it. So this is a 2026 lens. 2030 lens will look different. So that's just what I want to tell everyone here as well. It's not that there is no asset level scoring ever within the real estate lender assessment. This is a 2026 perspective where the changes are from a content perspective, we have different questions than the real estate assessment. From a scoring perspective, at this moment, it's management heavy, but in the future, that will change, driving the industry forward.
You took the words out of my mouth, 2030, right? So if you start to reverse engineer, right, timelines and outcomes, I would imagine the industry would really appreciate being able to have this data and do more when you get to 2030. So let's go, let's just keep, tilling the earth and moving forward on these issues.
Exactly. And there are different ways on how we can approach that. And that's just an engagement process similar to what we have done for the last 2 years. That's what we're going to continue to do. I just want to point one small thing because we have targets here and the performance components that we actually score. And the reason why we do that, or why we did that, is that we did want to give some points on the performance component, because we do know that there are some lenders that are actually already collecting this information, that have started years ago, and they've continuously asked their borrowers for this information. And they've actually are able to receive information on the asset level, on energy and GHG. And some of them, depending on the fund, have already set targets, whether it's a general performance target, whether it's a net zero target. So what we did within the assessment for 2025 and 2026 is we are giving some points on targets. So for the managers that are actually doing the things above and beyond what the industry is doing, we are rewarding them. So if you are able to collect the information, if you are setting targets, that's something that we want to reward. And that's why we added some points with regard to the targets.
We've been talking a little bit about scoring, right? And the score is important for sure, but it's not what happens, it's what you do. So if you get a score and it's great, great. If you get a score and it's not what you had hoped, that's okay too. What matters is that the next year, the year after that, and the year after that, that score doesn't stay the same, it improves. That's what we're trying to do with that score and a signal. So exactly. With that, let's talk about how the validation happens.
Yeah, so similar to the normal assessments, because we basically get the information that are submitted by participants. We validate that. We have a validation process, and this validation process is done throughout August and September. And then after that, we will score and we will benchmark the participants, and we will be able to share this information with them, as well as any other stakeholders that they want to share this with. We already touched upon the peer benchmarking. We engage with the industry to see what is really relevant for a lender specifically. So what you actually have on the real estate equity side, I will call it right now, we have peer benchmarking there on geographical location as well as property type. And we asked everyone in the roundtable, how relevant are those two? And geographical location was a very important one. Property type, a lot less so, because a lot of the lenders that we spoke to said, it's diversified. I don't specifically focus on one sector. There will be lenders that exactly do that, specifically focus on one sector, but generally that wasn't the case. So geographical location is how we currently benchmark, and there are additional elements that we will implement over the years, including the type of lender. We already talked about it, private credit fund, whether you're a mortgage REIT, insurance company, bank, and additional elements to that as well.
We're rounding the bend, heading for home. Let's go to the next one.
The benchmark report. That's something that everyone will receive, and that's also very similar to the other assessments. So you will get a validated score if you participate on October 1st, similar to the other assessments. You'll get a peer comparison, and you get insights on the indicator level, the scores that you've had, as well as how do you compare to your peers. The second thing is you'll be able to learn from each other, because we have these sessions, and we discussed this already, Dan, on a quarterly basis. We let people talk. We take a topic, we ask everyone, okay, which topic is relevant to you as a lender? And then we discuss one specific topic on a quarterly basis. So that's really learning from each other. And that's what we're really trying to do over the next couple of years. And together, I've already mentioned this, driving the industry forward and shaping the future of sustainability.
All right. So this next slide, we get some time. Yeah, timeline. Okay, go for it.
Shall I go for it? Okay, perfect.
Yeah, we're in the prepare mode for sure right now. Okay.
We're currently preparing for the real estate lender assessment for 2026. So between January and March, early March. We're currently really running to try to create the guidance documents. So March, you will be able to receive an updated version of the reference guide, an updated version of a scoring document, and any other type of document that you really need. We're available if you want to have a chat with us, if you want to understand more about this. That's really the preparation phase. From April 1st, that's when the portal opens. You're available. It's available for you to submit your assessment. If you do have any questions around that period, feel free to ask us. Try to understand, okay, how do I fill in the assessment? How should I fill in a certain indicator? And then we will close this on August 1st. The other assessments that we have on the GRESP side have a closing date that is earlier. But we did ask also on this front for feedback from the people that participated in 2025. Do you want to have a close on June 30th, or do you want to have an extra month? And what we found is that people really like to have an extra month, because often, especially on the private equity, private credit side, they were doing assessments both on the equity side as well as on the credit side. So, and the focus was really at this moment on the equity side. So we said, focus your attention on that, and then you always have the month of July to submit the assessment on the lender side. And what is very important here, we already touched upon it, is that the lender assessment is concise. It's a low burden participation. Asset level data is not mandatory. So the focus is really on policies, practices, procedures. What are you doing from a lender perspective? And what we find, and also the feedback that we receive, is that generally people can fill this in within a week. And we've heard somebody that said, I can do this within a day. So it's really a low burden participation. And that's why even that month of July should be more than sufficient for somebody to fill in the assessment.
What's been interesting to me to observe is that folks wanted July because they were very focused on the real estate side in June. And you've got private equity firms that have both, private equity and private credit funds. And that phenomena, we understood that. And that was great. Once they were finished with the lender assessment, they're like, we're doing this one first next year for sure. This was, it was simple, and it really helped us get our ducks in the row for the equity assessment and all of that work that happens, because it's much more performance focused as the equity assessment. So with the management side, within a week, within a day, you can bang out the lender assessment, and then you can continue to think about it and move it forward while you're also working on the equity side in the 2026 cycle.
Exactly. Between August and September, this is where we do the validation and the benchmarking. So that's an internal process. If we have any questions, we'll get back to you. And October 1st, you will receive the results. So, and then you can share it with any stakeholder that you have. So that's how the process works. On October 1st, you'll receive the results, and that's similar to the other assessments. So a cycle that looks very familiar to the other ones. With that in mind,
there you go.
You want to take this one, Dan?
Well, let's do it together. Let's do it kind of tight. This is, kind of a review as to the things that we've spoken about for the past, 30, 40 minutes here. Why do folks do this? Every industry benchmarks itself. How am I doing? Getting yourself out of the four walls of your firm to understand what's happening out there in the industry is really critical. So you benchmark yourself, you understand where you are, what the language and the contours of the topic involve, and then set pathways forward to improve on those attributes, right? And this is really a risk management exercise. The idea is to advance risk management practices within your firm and within the industry globally. Want to strengthen stakeholder engagement? This is an LPGP conversation, right? It's a language that people use to communicate structured non-financial data that goes to inform how the financials came about. It's very simple. Strategic decisions. Do I put more capital to work in in investments that will make marginal returns on efficiency, in the OpEx bottom line of my assets, right? That's very helpful. Going through an exercise like this is very helpful to teasing those attributes out. Mo's talked a lot about learning from peers. We really work hard to facilitate those kind of conversations amongst our members. And then recognition, right? You score great, tell your LPs. We've got people out here with awards like this, and they put them in their lobbies. That's what leadership is all about. And the spoils go to the leaders for sure. So go and tell everybody how great you're doing and that you're driving the industry forward. It brings everybody else along.
Exactly. Perfect.
What did I forget? Anything?
No, yeah, no, that's it. If you're part of this, the recognition is an important one as well, and learning from your peers. So we're really setting this up together as an industry. So you'll be recognized as a leader by GRISP and also by the industry itself in the future. So um, yeah, thanks, Dan. I don't have anything else to add. Maybe just
Let's
go.
get how we get started, and we might have to skip a couple of these slides to then land on the FAQs.
Yeah.
Let's do this.
So how to get started? We have a contact page. You can send us an email. You can message us. April 1st is really the time that we're signing up. So sign up before that time, and that's when the assessment is open. We mentioned already August 1st is the deadline, and then the benchmark report will be available on October 1st. So for the next couple of weeks, have a look at the reference guide, send us an email, let's set you up and participate in this. If you're on the participant side, if you're on the partner side and you want to know more, let us know as well. And if you're on the investor side, we'd love to get your feedback on how you're looking at this.
Well, Tassima, during the webinar here today, has talked a lot about industry engagement. And let's go to the next slide. One of the things that we've been actively engaged with is the Integrated Disclosure Project. And they're working on a borrower due diligence assessment questionnaire. They work with a lot of other, with ILPA and the major trade associations. And this is all about, what are the metrics, having them harmonized in ways that apply to private credit real estate, private credit infrastructure, private credit, private equity, whatever, right?
Exactly.
So the IDP effort has been a very important one to make sure that all parties are talking the same language and going to land on the same metrics. Really
Exactly.
critical.
Yeah, and just to add to that, what we've done here together with the IDP is really try to create a questionnaire, specifically a borrower due diligence questionnaire, because we do know that receiving that asset level information is difficult. Borrowers get a lot of different questionnaires, and it's very difficult to fill all of that in. So we try to harmonize that, hopefully, in order for the fund managers or the lender in general is able to receive information on the asset level from the borrower. So that's just one way of how we try to capture this information, working together with the industry to try to harmonize this. The second one, very shortly to take upon that, is try to come up with solutions internally within GRESB to try to help lenders receive the information. We do know that GRESB has a lot of assets that are already submitted on the real estate equity side. This information contains energy, GHG, water, waste, building certification, energy rating information. And all of this information is present in the GRESB database. This information cannot just be shared all along because there are access rights involved. But if GRESB can be an intermediary between the lender and the borrower, and in this case, the borrower is an equity participant, this is a way for the industry to go on forward and for us to help alleviate the problem of sharing data between the lender and the borrower. And so there are different ways on how we try to fix this whole asset level problem that we're seeing, the challenge that we're seeing. One is trying to work together with the industry, harmonizing questionnaires in order for lenders to receive information in an easier way. Another way is try to look internally, work together again with the industry, because we're not going to share information. It's working together with the borrowers. It's working together with the lenders to try to share information between each other. So just two solutions. If you're interested also in this asset level matching solution, this pilot that we're running, whether you're on the lender side, whether you are on the borrower and equity participant, whether you're an investor side or a partner, let us know and we're happy to talk to you about this as well. We have 6 minutes left. I want to go and talk a little bit about before we go into the FAQ.
Yeah, you're right. So I was just going to say the hunt for data is real, right? And so we're here to help as best we can. And there's various ways to do that. So let us know how we can be helpful for you. To me, and we've said this throughout this webinar, the objective is to advance the industry. So let's talk about, enhanced risk management, structured non-financial data, global best business practices. Don't let anybody tell you ESG doesn't matter, because that's what it means. Enhanced risk management, data monitoring, energy at GHG, being able to carbon footprint, right? Structured non-financial data, impacts that inform the financials, and making sure that that non-financial data can communicate elements of risk. That's what this exercise is all about. And global best business practices, right? Things are happening in APAC, things are happening in EMEA, in America, believe it or not, maybe Canada, where some good things are happening. So let's elevate those best practices, learn from each other, and keep moving the industry forward.
Perfect. 5 minutes left to talk about the different questions that we received beforehand. How is this different than the real estate assessment? I think we answered that one, but this really focused on real estate lenders. So it's really tailored to them through this engagement process. And if you look at the real estate assessment, we touched upon this as well. 30 to 40% is similar. The rest is different. That's from a content perspective. From a scoring perspective, we have a very different approach for it to be tailored to real estate lenders. Dan, you want to touch up on the one about governance?
Oh, I was focused on overlap, right? And
I'll go for it.
Right, governance. Well, so the foundation, the GRES Foundation governs all of our standards. And that is made up of all of our peers, right? For folks that work at the institutional investors, they make up the board of the foundation. There are committees that are made up of the GPs and the REITs and the infrastructure firms that are doing the assessment. And they're the ones that are helping move this forward. This will be the same. There will be, through the foundation, a group that ends up governing the lender assessment going forward.
Exactly. Benchmarking is done at this moment through geographical location. That's what we're currently focusing on. But we already touched upon the additional elements, the type of lender, the ticket size, the size of the company. Those are elements that will be implemented in the future as well. For 2026, it will be based on a geographical location.
How long does it take? Sometimes for some, it takes a day. For others, it takes a week. It better not take a month. It shouldn't. It's pretty straightforward.
Exactly. And asset level data at this moment is not mandatory for 2026. We touched upon the asset level matching solution. So if you do want to have, be able to try to match the assets that you have with the assets that are reported to GRESB through the equity side, we do encourage you to submit your assets or at least get in touch with us. And then we can try to be the intermediary between you as a lender as well as the borrower. But for the real estate lender assessment, it's not mandatory.
Reverse engineer to get to 2030, if you can, by getting asset level data, target that and work your way back, processes and procedures. And you can do it by learning what others are doing. Join the GRESB lender benchmark, join our roundtable, and get involved. That's how it works.
Perfect. Thank you very much, Dan. And with that in mind, we are done with the webinar today. We would like to thank everyone that joined us and that participated, for everyone that asked questions beforehand and during the conversation. And we're looking forward to working together with you. Please let us know how we can support you in the next couple of weeks. And thank you.
Thank you.